Welcome back to Alpha Recap, your post-market wrap from stockalpha.ai. We're recording after the close, so we'll walk through what actually happened today and what it meant. As always, if you have questions, you can reach us at stockalpha.ai.
Nice to be here, ready to unpack a day that felt split down the middle.
And split it was. The headlines were simple but telling. Markets closed with a clear leadership gap. The tech-heavy Nasdaq finished the day up about 0.3%, while the S&P ended down about 0.3%, and small caps slid nearly 1%.
Yeah, that tracks. So what really stands out here is how a handful of big tech names kept the Nasdaq afloat, even as everything else wobbled.
Big move.
Not great.
I mean, when you step back and look at this, it felt like a market concentrating its bets on high-quality growth and AI beneficiaries while rotating out of smaller, cyclical names.
Right. And the other thing is the flows for those smaller stocks were clearly tied to the banks and regional finance story. M&A chatter, cost-cutting, and some geopolitical sensitivity. That pressure showed up in small-cap performance.
Not a great day for the Russell-style names, that's for sure.
So what really stands out here is how policy and fundamentals both nudged the market. You had localized positives like fresh momentum in cannabis rules and some headlines around renewables, LNG, and nuclear. But those were concentrated. They lifted pockets, not the whole market.
Honestly, I was a bit surprised by how narrow the action was. Tech and communication services, especially big software and platform players, carried the day. Microsoft and Datadog were called out in the sector notes for riding AI-driven enterprise spending, and Salesforce got a quieter upgrade on its profit engine that helped software sentiment.
Yeah, and smaller software names had a mixed reaction. Some, like 8x8, only moved if they showed a clear path to cloud or AI scale. Investors were pickier than usual.
Let's talk sectors quickly. Energy had a split performance too. Transition-oriented names in renewables and LNG got attention, and materials and some miners saw pockets of strength tied to industrial demand optimism.
Real estate wasn't uniform either. Storage and logistics names had some momentum as investors eyed secular demand, but broader REITs stayed sensitive to rate expectations.
Healthcare stumbled on profit-taking and reimbursement concerns. HCA Healthcare was singled out as underperforming. Consumer and retail were mixed. Some retailers showed margin strength, others got pulled down with small-cap risk-off.
And financials. The smaller banks were under pressure. Names like OFG Bancorp and Town Bank were mentioned in the IWM weakness, thanks to M&A rumors and regional risks.
On the macro front, the Fed thread was central. The Fed's data-dependent stance was the backdrop. Inflation had cooled from recent peaks, but the labor market stayed resilient. That combination kept policymakers patient, but on watch.
Right. And to explain that in plain terms, when inflation is down but jobs are still strong, the Fed doesn't rush to cut rates. Markets translate that into higher rate expectations staying around, which can hurt rate-sensitive areas and make investors favor shorter duration or more proven growth.
Exactly. So growth names that show AI-driven revenue and margin improvement, think Microsoft and Datadog, got rewarded, while longer duration or balance sheet sensitive small caps sold off.
And at a technical level, the pattern, a rising Nasdaq with a lagging S&P plus a retreat in small caps, is something you often see after rate hikes. Markets narrow into leaders and breadth suffers, sometimes for weeks or months.
QQQ's resilience above short-term levels mattered because mega-cap direction still drives headlines. The S&P's modest pullback was basically a test of recent summer support zones.
So what should listeners watch next? A few things. 1, the earnings cadence. Company-level guidance will move sectors. 2, incoming macro prints and Fed speakers. 3, whether small caps stabilize or keep sliding. That's a big risk appetite gauge.
Add to that the continued focus on AI and software leadership. Analysts and investors were parsing who could show durable top-line growth and margin improvement from AI adoption. That's what kept some names in favor.
And don't sleep on the energy transition theme. If renewables, critical minerals, and LNG keep getting supportive headlines and flows, that could broaden leadership beyond mega-cap tech.
Quick recap on the notable stock stories. Microsoft benefited from AI monetization chatter. Datadog was highlighted for observability and AI tailwinds. Salesforce got its operational lift noticed. HCA Healthcare struggled on margins. Public storage had Q2 commentary being parsed for late-cycle demand, and smaller banks like OFG and Town Bank weighed on small-cap indices.
And 8x8 was a reminder that small software names need a clear cloud or AI narrative to get any love these days.
Bottom line, the market picture was concentrated strength and broader caution. The Nasdaq finishing the day up about 0.3%, while the S&P was down about 0.3%, and small caps slid just under 1% tells the story. Leadership narrowed to a handful of big tech and AI beneficiaries.
Yeah, for portfolio watchers, analysts note this is a period where breadth matters. Either small caps stabilize and leadership broadens, or we keep seeing a narrow market.
Key takeaways. First, the market narrowed into large-cap tech and AI-linked names. Second, small-cap and regional bank headlines kept IWM under pressure. Third, Fed data and earnings guidance will likely dictate near-term rotations.
And remember, this episode is informational only. Analysts note trends in data, but nothing here is personalized investment advice.
If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai.
All right, that's it from us. Catch you next time on Alpha Recap.